Hi, how are you? Today we will discuss IAS 23 borrowing cost because a lot of people have problem in the recognition of the interest charges, uh, uh, the cost of the debt, which you call the borrowing cost. When we borrow something from someone, for example, if we borrow money from a bank and the cost that we supposed to pay on that borrowed amount is called the borrowing cost, which is studied in IAS 23 accounting standard, International Accounting Standard 23, deals with these type of charges which we pay on our debt uh, after the maturity debt. Okay, now first of all I would like to discuss the scope of the standard. First of all, we should know the scope of the standard, and then I have to define the standard IAS 23 borrowing cost, and I will tell you about the standard at the end, that to which items are assets it is applied, or it is mean it is unapplied to those assets. I will show you later, and then I will show you a recognition of this standard borrowing cost, how to recognize in the books of accounts, because we recognize all the assets, expenses, liabilities. And I will also show you that the finance cost, the borrowing cost, how to recognize this type of cost, and then we should disclose how to disclose this cost as we disclose different assets and expenses or incomes in the notes to the accounts which is the fifth type of financial statement. Okay, an entity shall apply this standard in accounting for borrowing cost. It is simply I have gathered this all information very in simple format. Okay, an entity shall apply this standard in accounting for borrowing cost, IAS 23. The standard does not deal with the actual or imputed cost of equity, including preferred capital not classified as liability. An entity is not required to apply the standard to borrowing costs directly attributable to the acquisition, construction, or production of a qualifying asset measured at fair value. For example, a biological asset within the scope of IAS 41 agriculture. IAS 41 is also present in my channel. I have also uh, made one video in a very elaborated form about agriculture, and our inventories that are manufactured or otherwise produced in large quantities on the repetitive basis. Okay, how to define this? The standard uses the following terms with the meaning specified. Borrowing costs are interest and other costs that an entity incurs in connection with the borrowing of funds. Very simple. When we borrow a fund, we have to pay a cost which is called a borrowing cost, finance cost, interest charges, finance charges, or many more other names are also using for this. A qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. Qualifying assets is not the finished assets. These assets are substantial and to get ready for intended use or sale. Depending on the circumstances, any of the following may be qualifying assets. Inventories, as you know, inventories I used to also discussed in my channel, and manufacturing plants, power generation facility, intangible assets, investment properties. These are all uh, separate standards, and I have all discussed all of them. Barrier plants, financial assets and inventories that are manufactured or otherwise produced over the short period of time are not qualifying assets. Assets that are ready for their intended user sales when required are not qualifying assets. Now, the recognition. We recognize, we record all the transaction in accounting and the bookkeeping softwares are in a manual way. An entity shall capitalize borrowing costs that are directly attributable to the acquisition. Construction or production of a qualifying asset is part of the cost of that asset. An entry shall recognize other borrowing costs as an expense in the period in which it incurs them. How to disclose? For example, we disclose assets, expenses, incomes, uh, and the notes to the accounts. As everybody know about the accounting, uh, the profit and loss account, which is also called income statement. Over there, you may have seen the numbers 1, 2, 3, 4, 5. These numbers are disclosed in the notes to the accounts. An entry should disclose the amount of borrowing cost utilized during the period and the capitalization rate used to determine the amount of borrowing cost available for capitalization. This is all about the borrowing cost. Uh, Subscribe my channel. I have discussed all the accounting standards, and I'm trying to make another videos to give you more benefit from this type of videos. Thank you very much for watching.